Good morning. Good morning, good morning, good morning. Or good afternoon or good evening, wherever you are. We'll get started in a second. I just took the first trade of the day, so we'll go over that. It's running a little bit more than I anticipated, but it's a trade that I take pretty systematically. So just give me a second. Sound check would be good. So whenever you get a chance, catch up. Just give me a quick sound check. I'll turn down the background noise now. Welcome, welcome. Once I have a sound check, we'll get started. Good morning, good morning. Some familiar people. All right, so it turned out to be not such a bad idea to sell that. I'm talking about the S&P. We'll go over that in a second. Okay, no more good mornings, just sound checks. All right, good. Sound is good. All right, guys, welcome to the stream. Happy Monday. So first day of regular trading hours. Futures opened last night, nothing exciting, but maybe we'll get some action to start the week. If you're not a subscriber, make sure you hit the subscribe button, hit the like button. I've been trying to grow this channel, getting more consistent with doing streams, and I said I was going to do more pre-recorded content, but you guys know I flip-flop. I said I wanted to do more pre-recorded content because streams get kind of tiring sometimes, but I think I finally found a format that I can enjoy. So that is the live trading and just basically giving my thoughts while trading the market. And doing this on Monday is good because if I look back at my historical performance and just when I spend most of the time in the market, Monday is pretty light. So even though the market opens on Monday and I might take a couple trades on Monday, it's definitely one of my lighter days. It is third only to Saturday and Sunday. So I haven't really traded on the weekends much in the last 2.5 months, going back to whenever I started journaling a fresh journal, which was right after Labor Day. So let's get started. As a reminder, none of this is financial advice, strictly for entertainment purposes only. Sound is good, right? Make sure we have everything up. We're going to talk about BTC. We're going to talk about the S&P. We'll talk briefly about the FTX and Binance drama that's taking place. Some interesting things to talk about with respect to that. I don't want to spend too much time on that. Give you some levels, what I'm looking at, how I'm trading this market, and yeah, we'll be good to go. As a reminder, be sure to check out Phemex. So this is especially useful right now. You have a lot of people that are leaving FTX, and a very significant amount of people have signed up to Phemex in the last 24 hours. It's kind of crazy, but this is what happens when there's a bunch of fear on the timeline. So what happened was, and we'll go over this in a second actually, what I'll say is that you can see that, well, one, there's a lot of people signing up to Phemex. It's non-KYC still. It has very liquid futures and spot. It's gained a ton of volume in the last month against Bybit, and just in the last 24 hours, we've seen a lot of people come on from FTX. I could only assume it's from FTX, and I say this because someone created a Dune Analytics dashboard covering all of the money that has left FTX. So when we're talking 8 to 9 figures of capital leaving one exchange, and you see that on another exchange there's a significant pickup in volume and signups, it's clearly from what is taking place between CZ and Sam. So the link is below. It is tradephemex.com, or you could use the link that has the /Clark. There is a sign up bonus. So if you sign up using that link, you should get upwards of a $3,500 bonus, and that's great. We talked about fees in crypto and how disgusting they are. So even though Phemex has some of the lowest fees in the market, there are still trading fees. And yes, even Phemex compared to legacy markets is atrocious. All right, so let's briefly talk about what took place in the market. I think that this summarizes it. I'll go over my trade that I took in a second. The next trade that I'm interested in is in a half an hour from now, so we'll be live for that. But I will put this on the screen real quick. Let me just move. Actually, no, I won't use that because I'll just read it to you. Sam says, well, let me move this actually. Here you go. So a competitor is trying to go after us with false rumors, and CZ finally responds with a competitor tried to go after us with political lobbyists. So I think it's really obvious that, you know, as conversations have occurred the last couple of weeks with Sam and Eric Voorhees, that Sam is definitely closer to the regulators, and he's been building relationships and doing this now for the better part of over a year, and it's been against what a lot of crypto enthusiasts and OGs have considered to be appropriate. You know, you had a debate between him and Eric Voorhees last week. Either way, I guess what happened is, or what CZ assumes is that because Binance does not fall like within the limelight for U.S. regulators, that somehow Sam is using his relationships in a way that possibly could improve Sam's standing, right? FTX's standing, and hurt Binance. This is kind of like obvious. These guys are competitors. But either way, yesterday, Sam came out, or CZ came out, and very publicly talked about unloading a FTT position, right? So the FTT token. I think this was upwards of like 9 figures of FTT. Might have been less. Either way, right? Reducing their exposure. And at this point, Caroline had come on, so Caroline of FTX, and said that they would be willing to. So we'll just pull this up. We'll place this on the chart so you guys can see. No, where is this? Bear with me for 1 second. Oh, this must have been, oh, here we go. So place this on the chart. What is going on? Come on. There we go. So CZ talks about unloading. Caroline comes on, and this is after CZ's post, right? So there's, you know, clearly a reflexive response by price for obvious reasons, right? You don't want to be the one bag holding when there is a whale that is unloading, right? And CZ is obviously one of the largest participants in the market. So one thing, CZ's execution was clearly, it's not the way that you want to execute if you're a large counterparty, right? You don't want to just come to the market and say that you're going to reduce your exposure. So there's a lot of games taking place, right? Because if you're a large counterparty like that, you're not going to go about exiting your position like that, making it obvious. So it's either that he exited a significant portion of the position, or he didn't have any intention to and just didn't care and wanted it to hurt FTX. It's probably the latter, right? It's probably a combination, right? He got rid of some of his exposure, but his real intention was not to get out of this position in a cost-effective manner. It was to hurt FTX as much as possible. The trouble with this is this obviously hurts retail, so it doesn't make him look good. So Caroline comes on and says that if he's looking to minimize market impact for his FTT sales, Alameda will happily buy it all from him today at $22. Now, this inspired obviously a ton of confidence by the market, so you had another whipsaw. The trouble is, some of the market participants looked at this and said, well, why would you even be willing to buy it at this price? Like, why is it valued at $22 per token? If this wasn't a significant thing on your balance sheet, then why wouldn't you just let it drop more? It almost is like they needed to defend 22 to protect maybe some of their loans or any possible positions that they have that might put them in jeopardy. So a bit of an odd back and forth that's taking place. This is kind of like Barbarians at the Gate-esque, and Barbarians at the Gate esque. I didn't mean to. That's not the title. Barbarians at the Gate is about RJR Nabisco. It's actually about hostile takeovers. But two very large figures in the space that are clearly going to war right now in a very public manner and in a way that honestly, it doesn't make either of them look good. It doesn't do this market any favors, honestly. It actually has the potential to set this market back, right? You could have regulators look at this market now even more poorly than they already do. And you also can end up hurting, you do end up hurting inadvertently, or rather, excuse me, directly. You end up hurting the retail people that are holding on to these positions, right? FTT, for example. It's not like BNB has done exceptionally after that either way. But so yeah, bit of a back and forth. Kind of embarrassing to see this take place publicly, but that's the way things work now either way. And it's all, my assumption is it's power plays. All right, so I want to talk about the trade that I just took in the S&P, or rather in the ES, before we get into anything else, because I took that 30 seconds after the open. So we'll change the screen real quick. And this is the trade back here. So this is why I didn't start the stream right away. So 30 minutes after the open, 1 minute after the open, these are going to be the first trades that I take of the day. So I ended up just taking the first one and started the stream after it for the 1 minute candle. But what I'm looking at is essentially the first 30 seconds after the open. So this is a method that has been used by some previous pit traders, by some other equity index futures traders as well. And the idea is the 30-minute range after the open sets a high and the low. And what I'm looking for is the first expansion outside of that range. So if we're looking at this candle right here, this is tough to tell because this is not a time-based chart. So if I put on the 30-minute chart, just for the sake of this example, 30-second, excuse me. Here's the 30-second chart, right? Right after the open, or here we have it, okay? So let me just line this up. Whoops, excuse me, 1 second. All right, there's our 30-second chart. And then going back to what I will use, which is the volume candle, which is a 500 contract rotation. What I'm looking for is expansion outside of the 30-second range, right? So acceptance above the high, acceptance below the low, and ultimately I'm looking for just over 2 ticks. So this is something that I take with a bracket order and a hard stop. And I actually closed it out right before the stream. So I ended up capturing this. I captured just under, I think this was 2.5 tick. This was, 2.5 points, not 2 ticks. So a tick in the S&P is 25 cents. And if you're trading one contract, that's $12.50, right? And you multiply that value by ever how many contracts you're trading. And in the S&P, you could hit this for, you could hit the S&P for, compared to crypto, in a small move like this, you could hit the S&P with a significant amount of positioning. But either way, this is the first trade that I took. The next trade that I'll look to take, because I'll be streaming, is probably after the 30-minute opening range closes. So there's a lot of noise that takes place at the beginning of market open, and this is why people might prefer to use a TPO profile versus a volume profile. The benefit of, and you could see right here, so here's the TPO, and then here's your volume profile. There is a bit of a difference in how the distribution between the volume profile plays out and the TPO profile plays out. And a lot of the times, the benefit of using TPO was to do away with the aberrations that take place at the open and at the close. So if you're focusing on the market, right, the S&P, and we talk a lot about the S&P, and I trade the S&P again, because crypto is still highly correlated to it, or specifically BTC is. So at the open, the first half hour after the open, and like 10 minutes into the close, you'll see that the behavior really picks up. So if you looked at a volume profile, this might leave you with very interesting portions of the distribution that might not necessarily be important to pay attention to just because they're part of the open and part of the close. And that's where we see a significant amount of volume to begin with every single day, right? So to begin the open and to end to end the day, there's a significant amount of volume that's transacted. So that's a benefit of profile, so TPO profile, because you're only just looking at things that are based on time rather than how much was transacted at one particular area. So after the first 30-minute closes, right, would be the initial balance if you're using 30-minute rotations, or if you're using an hourly, it might be, some people use an initial balance of an hour. I would prefer to use the 30-minute trading equities. So we'll focus on that whenever when that comes up, and that'll be similar to what I did with the first 30-second trade. So what we'll be looking at is, so here is, right now we have 13 minutes left, but ultimately this is what I'd be looking at. So the high, the low, and depending on how tight or wide this range was to begin with, I might anticipate us to be more rotational, more balanced, more range bound, versus if this is very tight and we break from it, possibly to be more of a set of trending conditions rather. Also, keeping in mind, one second, we'll get to BTC right after this, just going over some thoughts, where the S&P closed last week. So the S&P closing price last week was down around 37.70. So more than likely, we will often fill gaps. Okay, so one sec. We'll leave that be. All right, so let's take a look at BTC. Any questions real quick before we get started, even though we have been started? Just a bit of a high time frame view first of the S&P. Throw some levels back on here. I erased everything this morning. Okay, so back within that range, right? So that multi-week composite we were talking about for quite some time now, price rejected at a key technical level. So this market is trading very technically, and I think that that's one of the reasons why I'm enjoying trading this market again, aside from the fact that costs are about 100 times less and liquidity is about 100 times more. But still trading very technically on the high time frame. And with that, I mean higher time frame pivots, levels that are very technical levels, very sort of TA derived levels, have been pretty actionable. So the lows of the weekly structure right around 35.90, highs so far right around 39.16. Just expecting now that we're going to fill out some kind of larger range, unless we're able to reclaim 39 again. So 39.25, 39.10. I've been kind of echoing these levels now for the last few weeks, last few streams. If we're back above the top side of that structure, we're just looking to play and fill out the larger portion of this range, which is sitting above that level all the way up to 42. All right, BTC. First things first. Positioning wise, so I don't think there's any questions, right? Software I use for trading legacy futures is Edge Pro X through Edge Clear as an introducing broker, and then I use Phil Capital as an FCM, and Rhythmic for data. All right, so positioning wise, the one thing that stands out to me is that in this pullback, we are on persistently positive funding. So whether you're looking at, FTX, if you're looking at Binance, if you're looking at Bybit, if you're looking at Phemex, in this move down, we've seen that there's been what seems to be more derivative buying pressure. So derivatives trading at a premium than spot. And in particular, down at this low where you have a little bit of a flag, and it's at kind of a key level that the market might assume to be a good level to buy as a pullback. We're looking at back within a prior range, prior range high, already broke through that, but this general region as an area to look for a pullback after this larger move up. In that move, right? So in this move sideways, so it's mostly sideways, we've seen open interest go up slightly. So from around 269,000 BTC to 272, so around 3K BTC, nothing majorly significant. But if you look at the spot CVD versus the future CVD, bit of a different story that's taking place, right? So there was absorption in that buyers are coming through in the derivatives market. Spot market has been kind of one way since the high, and the futures market is the one that is responsible for still trying to lift this up, right? For still trying to buy into this. So it's not something that I really like to see. You want to see that if this is the beginning of a larger bullish move, right? So if this is, again, I have some things that I'm looking at now more heavily. So one of them is the 100-day. So I only throw these back on. So this is part of a template that I only pull back up when it's relevant again. But the 100-day moving average, the 10-day moving average, and the 20-day. So these are EMAs. And this kind of crossover and acceptance back above the 100, back above prior levels of market structure with the crossover of the faster moving averages is something that I would get behind for longer term positioning. So more of a swing play, more of a spot play. And there's probably a good amount of the market that's looking at this as well and is looking at this trend beginning to round out and look more and more bullish in an environment that is becoming less and less responsive to any kind of negative news. So whether it was the employment data, the FOMC, markets are starting to respond to positive news again and respond less to negative news. So that is a good sign for a bottom. So when the market is more and more privy to these things, you can imagine that the first area that that's going to translate to is people buying with leverage exposure. So being that we've had a significant pullback, ultimately what I would want to see is that in the moves up and in the moves back, so in the pullbacks, we have the market still betting against this. So you don't want to see that they're kind of like chomping at the bit trying to buy this on the futures market. You want to see that there's sort of this disbelief behavior if the trend is beginning to shift, and the disbelief is indicated in the futures market with that, you know, in the case of the swaps or futures trading at a discount to the spot market rather than the futures premiums increasing and the spot market selling off. Another thing that I pointed out, this was yesterday, if you look at the options market, there was a good amount of calls that were sold right above 21,500. So that was, you know, kind of local to assume that anyone smart would do that, right? Price trading right below that. It's for this month's expiry, so that's like as close as to in the money as you're going to get. And I doubt that anyone significant would be selling that kind of selling calls when we're that close, unless they weren't going to go unless they weren't going to go hammer the spot market as well, right? So basically selling upside, right? Expecting that volatility is going to be crushed again and capping off that upside by beginning to unload a spot position. Just some thoughts on that. Not necessarily that it has to be the case, but it was, it ended up being that is kind of the level that's capped us off. And it was a 24-hour period where that positioning really began to pick up in the options market. And it was something that I thought was worth pointing out. This is Coinalyze, but the platform that I use for BTC is Sierra Charts, but XO Charts is a phenomenal platform as well. All right, so we have 5 minutes until the 30-minute range closes out. We'll look at BTC right now. As far as BTC is concerned, lost momentum at the highs, right? Derivative positioning mostly, and now reaccepting back within a prior weekly value, right? And you can see this is kind of a multi-day composite and it's pretty clean. Now, there's more overlap towards the latter portion of it, right? So you had a rotation higher, but this is a week-long structure, and the idea is between 20,900 and right around 20,200 You have your value area low and your value area high. More than likely, if the market doesn't hold, you know, sort of around this prior naked point of control. So one sec, this level right here. If we don't begin to base out here and put in a higher low there, you're more than likely going to fill out the lower portion of that trend A, right? And just kind of revisit the value area low of this entire range. So ideally, the market holds prior daily highs, right? So this is a swing high in the daily. You know, you're making a series of higher highs and higher lows. Ideally, the top side of this structure remains as support. Clearly, we accept it back within the range. So more than likely what you get is a move from the high of the range that ends up trading back down to the low of the range and revisits that daily low right around, I believe that is around, one second. Just put on some lines. It's right around 20,100. So I'm kind of anticipating now, being that the market is pretty heavy, and the S&P is moving down. We failed to accept back above 3,900. BTC has more derivative activity. I'm betting on us covering this range. So ultimately 20,100 as a target locally. And then we'll see if we could trap any kind of selling behavior below that low and reverse it for at least for a move back up to the top side of this range. Now, I think that that's pretty, excuse me, I've got some a little bit of burping going on this end. I think that that's something that we likely see, right? Where you sweep the low, you trade through a level where, you know, a significant amount of activity is likely to come into the market. Stop out some positioning at that low, right, before probably returning back to the high of this range. So what I don't anticipate is that we're just going to nuke through this entire structure. Not to say that that can't happen, but I'll be really focusing right around 20,100. I don't know if I really care about what's happening too much here. I don't think that the market looks like it has the kind of behavior that I would want to see for it to start turning here. Again, more derivative buying than spot buying. This kind of looks like it's just flagging right now for that move to 20,200, 20,100. So all makes sense. Kind of stuff that I always go over. So what more often than not happens is this is such an important point for people, right? Because this is your range high retest. It's the second retest. This was the trap setup below this initial low. What I think the more than likely happens is we get another panic flush through there that ends up catching traders offside and ends up leaving us with another rotation back towards the high of this prior weekly value. I don't know what that ends up doing. So I don't know if that ends up taking us to the next major level, which is right around 22.4, or if that just puts in a lower high. Ultimately, that is probably, if you're thinking that the market is bearish and it's going to continue down, I think rarely are you going to see a case where the market just does this. And more than likely, we see a case where you get an opportunity to sell the attempt back up to that high. So putting in a lower high right there. Oh, that 30-minute range is closed. So we're looking at 37,771 and 37.99. So just to mark off some levels. And then what I'll do is just to keep an eye on this. Actually, I don't even have to put those on that chart. Something that I do, and I'll switch the screen real quick so you can see. So these LVNs, that's done, that's filled. So I have some notes on this chart. I'm going to get rid of them. So the benefit of using this is on the DOM, I could place notes right away, and it's going to mark those levels on my chart. So for example, now the level that I'm focused on is, and we'll go back so you can see it on this chart real quick. This is the 30-minute opening range right here. So the high is right around 38, and the low is, we're looking at a low of 37,771. So now what I'll do is I will mark that off on my DOM. $30M low. Now you could see, what did I not leave that? 1 second.
We're taking over.
There we go. And now the high, 30, well, right around 38. And now we have those levels on the chart, and this is going to be, this is directly on the footprint chart. So 1 second, where is this? Here we go. So now we'll see if we're getting close to those levels, exactly where they are without actually having to worry about, looking at the chart necessarily. So, all right, so doing this live, as you can see, as I mentioned last stream, so last stream we had 3 successful trades. But doing it live is definitely more difficult. So the idea is that I'm not really concerned, and I'd be trading this more if I wasn't currently doing the stream. I'm not really necessarily concerned with what's taking place right now. I'm looking for the activity through those extremes. So our range right now was like 28 points wide. Okay. This is kind of a wide range. So it's not exactly tight in that a break from it, I would anticipate some kind of trending move. The way that it's set up right now, I would more than likely anticipate that the market just ranges a bit more within those levels. So ultimately, if we move through 38, what I'm looking for is some kind of failure through that level. And the same thing right around 37.71. So if we move through 37.71, some kind of failure to break down, and I'd be looking to play these back towards the center of that range. So you're kind of treating this like you would a day's value, or if you were, accepting back within prior balance, for example. All right, so we'll leave that. There we go. 1 second. If you guys have any questions, because this is, again, these streams are going to be pretty casual. The focus would be to take trades during the stream. This actually looks like it's going to expand upward. I have hotkeys, so I don't have to click to get long here. Kind of think that this ends up, so you can't see the chart, but I want to get a pullback back to the high. We're above VWAP now. Let's see. Entered long there. So I actually want my stop below VWAP. So for the sake of the stream, we're just going to trade one lots. So a one lot in the S&P is right around 200,000 notional position. And so if this stops me out, by the way, and then we end up reclaiming VWAP and holding it, I would just get back into the position more than likely. But I'm looking to see if we could get continuation up to what is ultimately that range, today's high, right? So my stop is 37.85. We're kind of flirting with it. Ah, stopped out. So if we could get back above VWAP and hold that again, though, I don't have a problem getting back into this. Nope. So I definitely just clicked market buy instead of buy the bid because my stop was way too tight on that. All right, so we'll leave this for a second. So I have brackets set up so that automatically my stop and take profit is placed, and I have a couple different brackets based on what exactly I'm trying to trade. So that was 2 stops, but we have 1 win in the day, 2 stops out. Now holding that VWAP though.
I can't hear you. Say it again.
So you could see that there's actually no, you can't because I'm on a different chart. Let me go back to the main screen. So while we wait for that, because it looks like we're just going to trade possibly back to the low first. So BTC, it's kind of the same situation as the S&P right now. Both of them trading below where most of the volume activity has come in today. So not necessarily a good look. The reclaim or you know, a reclaim of strength, especially in this pullback. The first sign, one of the first signs would be us pulling back above VWAP and holding that level. So capturing a significant amount of volume below that into this low, and then being able to trade back above that. So the case with BTC would be, all right, are we able to trade back above 20,800? And for the S&P, similar to what we're doing right now, are we able to hold VWAP again, which is right around, let's see, 37.25. There we go. So I'm long again. Push, 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 push.
I can't hear you. Say it again.
Bear with me, I'm looking at the other screen and I'll show you guys in 1 second. This is the trouble with trying to trade and stream at the same time. You guys can leave questions in the chat, obviously. Okay, so that was... So here's a good example of making a fucking mistake because I'm streaming and trading at the same time. And this is, I guess, the benefit of trading with just a one lot for the stream. So I closed out this trade, and instead of hitting to flatten out, because I'm looking up at this screen and my DOM is lower, I ended up hitting to sell the ask and ended up selling the low. And I bought it back in profit, but this is, I'm not trying to trade for just the 1 and 2 ticks up, 2 ticks down, 2 ticks up. Not unless the actual setup is there. So even though those 2 trades worked out, that was not what I wanted to do. So pay attention to what you're doing. This time it worked out, but making a mistake like this and fat fingering and doing things like this can actually just completely blow you up. So it's still that I'm looking for price to hold VWAP. If I could capture a couple ticks above it when we're above it, that's fine, but any questions, guys? That was the trade right there. So yeah, these are, if it wasn't streaming, I'd be just using hotkeys right now. And I would have never made that error of selling twice. Because my keys are just very separate. So this already, so one contract of the S&P is around $195,000, around 195 to 200,000 notional. So yeah, you are technically using leverage. That's just for one contract. And this is the ES. So this is the E-mini futures contract. It's a derivative of the S&P 500. It's not the SPY, though it's the same thing basically, but it's futures. So is Bitcoin just not moving at all? Is that what we're looking at? Yeah, basically. So that trade was the good trade to take. Damn, the long above VWAP. After a move off the lows. And now we're back up to 30. We're back up to the high of the 30-minute range. Into the value area high. We have a set of equal highs above 38.5. So maybe we could get a stop run above there. So these are the equal highs. Right here. You have a poor high. So some kind of flush up through there and then reacceptance back within. We'd look to trade back within value in the direction of the move down. I kind of would want to see that we're able to sweep that high though. So not just going to chase it right now. So this is a good example of that level. So that high that I was talking about was right here. It was 39.25 actually. So I was waiting for 8.38, but that was your high of the 30-minute opening range. And what you'd expect is the market to come back down to at least VWAP and to fill out this structure. So invalidation would be able to hold that, but we do have, it is entirely possible that if we move back up, we end up taking Friday's highs or yesterday's highs, or no, excuse me, Friday's highs. Before resuming down. So maybe a pop up, second failure, and then can get something on the other leg. So this is a market profile. This is a TPO chart. There's a free course that I talked about. It's www.blockroots.com. And this chart that we're looking at is not a time-based chart. This is a 1,000 lot chart. So I have 1,000 and then 500. And then I have a 3-minute chart just to get a little bit better context. If we have too many candle prints and I don't get an idea of what the local structure is. You know, I have that right here too though, but this is a 30-minute and this is a TPO daily chart, so. Some size coming in. 37.88 is where most of the volume was done today so far. So wouldn't be surprised to see some kind of short covering there if there were sellers that are going to look to cover on the return back that maybe were underwater. Bitcoin is not doing anything right now, so that's why I'm leaving this screen on. So most of our volume and most of our distribution now is above us. Not the most attractive looking setup if you're long, right? If most of the volume and most of the activity came in higher and you're in position, so this is what, you know, this is inevitably what sucks is if you miss your opportunity and you're not near another level that you're looking to get involved, or you're not local to a level where it might be worth it for you to start paying attention. That could be it sometimes, right? Like, for example, I was looking to get long above VWAP. The first trade got stopped out, right? Got long again, but did not have the bracket on, so the stop was very tight, or rather the bracket was on, but I marketed in instead of best bid. So 2 errors, right? So longing at market when I could have just got filled with a limit. So what I did was jump the spread, so my stop was a tick closer than normal. And then the second error was hitting the sell the ask button instead of flatten button. So it might not necessarily be the best idea to trade and stream at the same time, but this is why I don't trade with the normal position size. So you have some, like I said, that 37, 88 levels where you might see some covering. So you have some response right there. There's 9,600 contracts traded there. So that is today's POC. Yeah, let's take a look at some cryptos. So what is pumping right now? Matic. So I mentioned this earlier, but yeah, the 100. I've been using moving average for a long time now. So anyone who's been following me knows that I have a template with some longer dated moving averages, some fast and longer moving averages, or I should say short and longer. But it kind of looks like we're getting to that point. I mean, if you look at ETH, it's already done it, but BTC, Solana, these are things that I've been talking about recently. If we could get back above that 100, this historically has been a pretty significant level. And even without that, it would just be an indication that the market has at least stopped moving down, has begun to base out. So what was it, Matic? So I'm looking at the ES, the VWAP flip now is resistance. So we ended up rolling at the high without much trouble. That's, again, I was anticipating maybe some kind of run above Friday's highs, but we never got it. It just came right to the tick of the 30-minute open, and that's it. No, I was just putting Matic on. I got it. Oh, I see what you mean. Okay. Matic is pumping, yeah. The two main areas that I'd probably be focused on for Matic. I mean, if you're buying right here, you have this whole cluster of resistance. This weekly consolidation before the breakdown. So right into those lows. So being that we haven't had any kind of return yet, this weekly level right around 99 cents, considering that's right at basically $1, we know how the market feels about, you know, big round numbers like that, or in that case a whole number. I'd probably be interested in seeing what kind of some kind of snap buy at $1 around 102 for a quick bounce if the market came back down there. But where it is right now, we're just like right into resistance. And it's kind of obvious this was a multi-week range. This should act as support now. Whereas if you accept back within this range, It's kind of just a multi-week composite, right? Except back underneath that high, probably come back down to the mid and then down to the low. Damn, missing that trade in ES kind of bothering me right now because it looked like a pretty decent setup. And like I said, if you don't take it, then, you know, if you're in the middle of nowhere, then you just have to sit on your hands and wait. Meanwhile, that would have been a bunch of points in the bag. This level is so clean right now. This 28 level, and it's also VWAP. Low not taken, but I wouldn't be surprised if you end up with something like that. Like if we traded back above, and I mentioned this at the same time I was talking about the ES, if we traded back above 20,800, I'd probably look to get long. This is today's VWAP, right? The value area high of today. We're at the lows. So if we traded it back above 28, being that we've had a pretty strong push down and it's in sort of an environment of FUD, I think there is a good short-term trade to take that's there still. Even, you know, regardless of whatever positioning on the high time frame seems to have accumulated in the futures market. And like I said, I mean, if we were going to put in a lower high over here, kind of an area that I would expect us to run into trouble, probably be around this naked point of control around 21,240, 21,003. So maybe you get left with something that tops out right there. That's that POC, and this is that 2-day value. I gotta change the color of this box so you probably can't tell what it is. So if we get something above, so all right, so you have a 20,800 trade probably to, let me open this up more. Fuck, hold on. There we go. Above 20,800, probably get a move back up to today's highs. If we're able to hold last week's value again, so if we're able to hold something like 20,009, 20,960, it's a hold above today's value now, then I would probably look at this prior 2-day range with that naked point of control around 21,240. To possibly put in some kind of second attempt up here. If not, looking around 20,100. God, the one day that I'm upset that I missed a trade and it's actually bothering me is a Monday when I know that I don't take too many trades. But You know, I've been saying that for a while now, and it's been because I've been trading. I've been only focused on trading Bitcoin. And now I think you get the idea. It's like Bitcoin isn't doing shit. If we look at low time frame chart, Bitcoin isn't doing shit, right? Meanwhile, if you look at the ES, it might be looking like it's not doing anything, but the smaller rotations that take place, the market is just so much more liquid that you could take advantage of them. You don't need the market to move 20% to make money. So I've been saying now for a while, like, I haven't, Mondays I don't trade much, but I just started trading the ES again last week, or in the last 2 weeks, and that probably is going to change, right? I'm probably going to be more active on Mondays now because I'm trading the ES again. So to miss a trade is kind of annoying because, well, it was there. But let's see. We might have the second attempt at an extreme. Down at 37.71. So we'll see if we get a move down there. Then possibly we could fade. So some absorption right here, it looks like. If you look at CVD trending down, price kind of drifting up, but I would still want to see us back above VWAP. Like, I don't want to take positions long into VWAP unless we are closer to the lows at this point. So even though we have some slight absorption here, I mean, and VWAP's dynamic though. So, I mean, it's a line because that's the, settings we have so that we could see the exact line, the exact point. And there is an exact tick where most of the volume was done today. But see, that's the point. Like, this looks like absorption. So you have prices drifting up, CVD drifting down. So that doesn't mean though you just long off of that, because there's other things you should pay attention to, like the fact that we're still under VWAP. So if anyone was long from this morning with size, right, or is looking to even get out of a larger position, VWAP is a place to do it. And if you were long off the open, or if you just imagine that VWAP is, again, the average point of risk, if the market is below it and it's coming back up to it, it's just likely to run into selling pressure as people try to get out at break even or try to get out at more favorable prices if they're underwater. So I don't want to long that. I'd rather see that the market is able to hold that. We have a ledge if you look at the profile. It's a bit of just a lack of filling out in this upper portion of the distribution. But it's early, so kind of want to see if we clean up these lows. I mean, ultimately we're holding Friday's value, which is good. So holding 37.69. Oh, of course. Yeah, I see the chat. Yeah, it's just, it's a pain in the ass. The only, like I mentioned in a tweet last week, I don't really care so much about the trades, honestly. I care about just small mistakes. So, if you're trading and you're focusing on tick values being very important in the S&P, whereas like dollar point values don't matter much in Bitcoin, by marketing in, my stop was just that much closer because I'm jumping the spread. So my bracket order wasn't accounting for that. And I meant to hit buy bid. So place an order at the best bid. So you're almost always going to get filled if the market's not racing around. For that particular setup, pull back to VWAP, that's where I was looking to get filled. And I would have get filled, but instead I market bought in. Because I market bought and jumped the spread, my stop was that much tighter. And was stopped out. And then accidentally hitting sell the ask instead of flatten, so increasing a short position that I ended up closing out in profit either way for an extra tick, but still not planned for. What were we looking at before? Because I thought I was looking at... Oh, no, that was the ES. Here's the S&P. So last week's close. Holding last week's close. I guess I should go over some other things as well. The market's just not doing anything right now. Sushi, real quick. This high time frame level is pretty damn clean. That weekly level around $1.50. You had a pullback already, but I would look this level for this to remain bullish rather. So there's not really much that's in the way of sushi up to that 275 level. If you go on the daily, you know, that was just a pretty one-sided move down. So holding this on the weekly though, I think is pretty important. A multi-week range high, that $1.50 level. See, we've retested it once. We haven't had any kind of weekly pullback to the level. So price still fighting with the VWAP. Give me one sec, guys. I have to just use the bathroom real quick. All right, back. Sorry about that. Possible to trade the ES with a small account? Yeah, you could put up, for day trading margin, you could put up that amount. You just can't keep positions overnight with that amount. But you're going to be limited to the amount of contracts you could trade. So you could probably trade two lots with that. So 2 contracts. Which is at, you know, think about it. That's a lot of that's a lot of leverage. At 2 contracts, every point, every tick is $50. So I was just thinking ways to make the live trading streams better. And I would definitely take some input, because one thing that is clear is it's tough to do both at the same time. I think what is tough is also like looking at the chat, doing this, going back, through charts, looking at altcoins all at the same time. And you guys know at this point, like I'm kind of a perfectionist. I'm trying to always do the best thing that I could do. So maybe, but I hate to say this because then it's like, what happens if something comes up? Maybe what I'll do is I will dedicate a stream a week towards trading the ES or index futures, or it could be anything. legacy wise. And then I'll dedicate the other streams to trading just crypto. Excuse me, it's 12.50 per tick. It's for one contract, it's $50 a point, and then 2 contracts is $100 a point. That's what I meant to say. So a point is just $1 increment. But yeah, per tick it's $12.50 per contract. It's not crazy because if you think of like crude oil, if you trade crude oil, it's what's it called? It's $10 per tick. That OI is coming down. Let's take a look at FTT. Look at the open interest after Caroline's comment. So I imagine there's probably a lot of people that think that they're backstopped, right? And that this is a really good long. So you had a bunch of selling. Right, someone was absorbing that buying, funding going negative. It looks like we just started to see a flip in that behavior. Either way, whether it's aggressive longs or shorts, you could see that from this point, there's a significant amount of position that came in. I mean, it's not that crazy because this is not BTC. So when we look at, like, for example, this is everybody, stablecoin margin. It is. I mean, it's 100 mil. So yeah, that is quite significant. So what I would just remember is that even if you're not thinking whether this is longs or shorts, it's reasonable to say that all of that came in. So let's go back to right around this point. So that started coming in right there. Right? Price has not really gone up much from that point. We're like 4% higher, but open interest has gone up 100%. Now, as price is moving up, one sec, you're not really seeing any liquidations come in. So not really any liquidations come in. So if these were shorts, you probably have to trade a little bit higher at this point because you'd have a good bulk of that. It's actually, so from here to here. So just look at this box and just consider this as the box of risk, right? Within this box, a bunch of positioning came into the market. You probably don't see any significant change in that unless the market is above there or below there. So if this was a bunch of shorts opening, they're still in decent position as long as we're, I think, below 23.5. And if it's longs, then they're still in good position as long as we're above the lows. So this sideways range on, a grossly increasing open interest, funding flipping both ways, you don't have to try to coin flip this right now. I think that if you're above 23.5 or if you're below 21.5, just expect this to puke hard in either direction or continue in those directions. And I think that it's safe to say a good amount of it is short. The market usually responds more to fear than it does to it's more likely the market is fearful and stupid than thoughtful, right? So CZ talking about selling all his FTT and all this war taking place, and people, this kind of goes along with what the activity that we're seeing in on FTX exchange. People are afraid. So you probably have a lot of short activity into this low. Again, funding going very negative in this move. So I think that you're more than likely to get a squeeze. FTX is not insolvent. What are we thinking, guys? Yeah, I could definitely post my Coinalize setup at some point. Yeah, I'm probably gonna end the stream. I mean, it's I'm not really feeling it right now. It's not a whole lot that's taking place. Sorry to get on here for a boring stream. I will definitely go live again on Wednesday. I like monitors wise, I have Asus. I enjoy my Asus monitors. Of course, guys. Happy to help always. This stream was kind of last minute, so I wasn't like actually mentally geared for a stream, and I hopped on and ended up being a boring stream anyway. All right, guys, I'm out. Till next.